In this video, we'll talk about the basics of commodities investment. A commodity is a basic good used in commerce that is interchangeable with other goods of the same type. Here are a few traditional examples of commodities. They are grains, gold, oil and natural gas. For a lot of investors out there, commodity investment is also something that we can add into our portfolio during periods of market volatility. The prices of commodities tend to move in opposition to stocks. The commodities market is mainly based on the basic principles of supply and demand. When there is a low supply in the market, it will drive the prices up. Any major disruptions in the supply of commodities, it will have a big impact on the prices. Now, let's take a look on the common type of commodities that we will be focusing. Metals and energy. Metals commodities include gold, silver, platinum, and copper. During the period of market volatility or bear market, some investors will flock to precious metals, gold in particular. This is because gold is best known as a safe haven asset. Investors also will invest in precious metals as a hedge against currency devaluation. Energy commodities include crude oil, heating oil, natural gas, and gasoline. It is a very volatile investment when there is an economic downturn, wars, political issues arise. The price of the energy will be greatly affected. Investors who are interested in the energy sector should be aware of the enforcement by the organizations of the petroleum exporting countries, OPEC, and also the new technological advances in alternative energy resources like wind power, solar energy, and biofuel, which aim to replace crude oils as a primary source of energy. This would have an impact on the energy prices as well. Now, let's take a look into ways to invest in commodities. There are several ways to invest in commodities. For those investors who are interested in investing in commodities, they can look into commodities related stocks, exchange traded products, mutual funds, or even physical raw commodities. By investing in commodities, what are the advantages of commodity investing? First, diversifications. A well-diversified portfolio must have a mixture of investment vehicles like stocks, bonds, REITs, cash, and of course, some commodity investment. This is because it can help us better manage the market volatility. Second, potential returns. Commodity prices can fluctuate due to the factors of supply and demand, exchange rates, inflation, and the overall health of the economy. In the previous few years, we had a political turmoil where the few major countries who are relying on the energy sector were combating the prices of oil supply. It has pulled down the oil price globally, and the economy in the whole world was badly affected. Hedge against inflation. Inflation can erode the value of stocks and bonds, and it also means higher prices for commodities. Commodities in general have shown quite a strong performance in the period of inflation. But commodity investors should always take note of the commodities market as it will be very volatile. We have come to the end of this video. We hope that we have given you all a clearer picture of the commodity investment. In the previous few videos, we talked about stocks, ETF, REITs, and now we have commodity investments, which we strongly believe that the beginner investors out there, they'll have a much more diversified portfolio and potentially will gain a very lucrative return if we invested wisely based on the market conditions. As there is always a saying, never put all your eggs in one basket.